So today is supposed to be a really important day in the inflation/rate world, and it hasn't turned out to be. We know interest rates, inflation, both have a really big impact on cost of living, cost of home ownership, and really affects the real estate market as a whole. And the reason today was supposed to be a big day is each month we progress, we're replacing year-over-year data, CPI data, inflation data from the previous year. So we can look back into 2022 and see when inflation was kind of peaking or at a high point. And now looking at where we expect to be in 2023, replacing last year's numbers with lower numbers means overall inflation's coming down, rates like that, cost of home ownership comes down as rates come down. So today was supposed to be where we turn that corner and start trending to a lower rate environment. Didn't turn out to be that way, as previous year's numbers were revised. When we compare that to 2023 numbers, specifically April numbers that are reported May 10th today, the expectations came right in line. So what does this mean moving forward? If we look back to 2022, April, May numbers were also elevated. So as we get to June, July, we should get the news we want. So I ultimately think we're on the verge of turning the corner. We just didn't do so today. So if you're a real estate agent or a prospective home buyer, what does this mean for you and your clients? Well, as soon as we hear that we've ultimately turned the corner, the sentiment in the market is going to be very positive as far as rates and revisiting the idea of home ownership. So I do think it'll be a surge in the real estate market. If you can get ahead of that surge, you're going to get the best of both worlds. You can get the house you want, and then as we proceed and go down this trend to better pricing, then you can consider coming back and refinancing.